Hello and welcome everyone. Today we're going to talk about three simple things to improve your trading. Guys, there's no secret about trading. You need to have a strategy, you need to work on it, and you need to have your risk to reward set out. You have to have a target and you have to have a stop loss. So let's talk about these three rules, three simple things that you can do to improve your trading right now. So the first one is develop a simple system and work on it. The second one is take small risks to earn big rewards. And third is avoid large losses. So let's go into details on what we mean by each of them. All right, so number one, develop a simple system and work on it. Okay, so on your strategy, keep it simple and with a clear signals. You do not want to overcomplicate it. You do not want 10 different indicators in your chart. You want to keep it simple so that when a signal is triggered, is alert to you, you can act on it right away. Okay, all you need to be profitable is one simple system that works on 2 to 3 tradable instruments. Many people think that you need to trade millions of stocks, so many different stocks, cryptos, futures. There is a lot of traders that made millions trading 2 to 3 instruments. Why? Because they knew how the stock would perform depending on certain circumstances. If it was a good earnings, if there's bad earnings. So keep it simple and work on 2 to 3, and then you can work, and once you have achieved some success on those, you can increase those, but the less the better. Keep that in mind. Stocks or any instruments are not random, guys. People think that this is kind of a random game. No, this is not. Why? Because people are behind every buy and every sell. And what are people? People are creatures of habit. Guys, keep that in mind. It's you and I that are buying and selling. So we have habits, and these habits are represented in the chart. All right. So what do you do? So to start, find a technical signal and study it like crazy on just one stock or one instrument. Look back on the charts and see how it performs, and from there you develop a good idea of how this strategy will perform in the long run. Remove some of the losers, focus on the winners, and that's how you go. All right, number two, take small risks to earn big rewards. All right, what does this mean? This is really important, guys, really important. Good traders risk little to make a lot. A lot of people want to keep buying, selling, buying, selling. No, there are many trades, and there are trades every single day. Okay, so risk little to make a lot. And here's an example. With a 1% risk and 2% reward, a profitable trade of 50% of the time, it will be consistently profitable, right? So the key is your risk is less than reward. And here is a perfect example. People think that you need to be right 100% of the time. No. Here's an example. You have 10 trades, you have 5 losses, and you have 5 winners. So let's say, on the 5 losses, you are risking $100, each time. So on 5 losses, you lost $500. But on the 5 wins, you are doubling your win, because you are earning $200 for every trade. So 200 times 5 is $1,000. So you risk $100 to make $200. You lose 500. You won 1,000. So your total profit is $500, guys. So this is very key, and this is crucial to your success. So there are trades every single day. Look back in the chart, find and study what your target and stop loss would be, and focusing on them. Okay, so review your trades weekly to find your biggest winners and focusing on them. Okay, so try to review. This is like inventory, right? You need to know if you are in a coffee shop or you sell whatever, and whatever shop you have, you need to know what are you selling good and what you're not selling good. If your customers are not buying this ugly white t-shirt but are buying this green t-shirt, well, focusing on the green t-shirt because that's where the money is. And this is the same thing for trading, guys. All right. Number three is avoid large losses. Small losses are inevitable in trading, right? We're going to have losses. This is inevitable, okay? But large losses are completely unnecessary and will wipe out your account, okay? So make sure you remember that. There's only two ways that this happens. Either by holding a loser too long after hitting your stop loss, or you're trading too large, too many shares. You need to review what are you trading and how are you trading. You do not want to hold losers too long. You hit your stop loss, you're out. Okay? Take action, take your lumps, exit the trade, and look for your next trade. The sooner you do that, the sooner you act, the better. Guys, these are three simple rules for you. Okay, and the last thing I ask you is that if you like our content, make sure that you subscribe, like, and share. We have free Telegram group, website, Twitter, and YouTube, where we try to push good content for you every single day or every other day. So make sure that you give us a thumbs up, subscribe and share. So that's a great way to support our channel. Thank you for watching, and I'll see you on the next one.